Welcome back to BLOCKTV. It's time now for Long Read Sunday. And crypto Twitter serves us as a never-ending stream of information, thoughts, and discussions about the world of cryptocurrency. It's a mammoth task to keep track of all of it, but fortunately, we're joined every week by Nathaniel Whittemore, who lives and breathes the ecosystem and combines all the best of the best into his Long Read Sunday Twitter column. Nathaniel, thanks so much for joining us.
Hey, thanks for having me.
All right, so kicking us off this week, Ryan Selkis has an interesting take on the Telegram saga, I think we can call it at this point, after so many years ongoing. What is it that drew your attention to this analysis on this ongoing and pervasive issue in the sphere?
Well, so I feel like the story of this week in some ways was like each of the narratives that's competing for our attention in 2020 had a little bit of a story, right? And so one of those I think has to do with regulatory action and the launch of corporate coins. And so obviously last week, Telegram was depositioned by the SEC, and in advance of that deposition, they made the announcement that Ton, their native token, would not be integrated into the Telegram Messenger, which was obviously a real bummer for the investors who spent $1.75 billion or $1.7 billion buying that token in advance. You have to assume under the assumption that it would be integrated with the messenger, right? The logic of that investment is almost entirely about its integration with the messenger. And so there were a lot of folks who were commenting on this when this news broke. Some were pointing out the fact that it seems to be maybe Telegram playing a little nicer with the SEC, even though they've been pretty confrontational and aggressive in their at least public attitude so far. But then there were others who were kind of looking at it from a more systemic level, and that's where Ryan comes in. And so there were two big points that I think Ryan was making in his analysis. The first was the idea that in a weird way, the presence of these tech coins like Libra, like Telegram's Ton, like Kin even, although it's not quite on the same scale, is that it in some ways actually paints the Bitcoins and Ethereums, these tokens that are built, maintained, generated by decentralized networks, or at least a lot more decentralized than Telegram. It makes them look better, and it points kind of the regulatory rancor at these coins that are much more closely aligned with a specific messenger, a specific centralized company. So that's one part. The second part is basically in the wake of these coins being more a target of regulatory scrutiny. Ryan is wondering whether we're going to see protocol level M&A, where you see some of these projects actually find ways to integrate in more and kind of form stronger alliances together as they figure things out. Now, that's it's highly speculative, and in fact, a lot of folks for a long time have been speculating about what protocol M&A looks like, how it's different if you're trying to combine two different decentralized networks. But I thought it was just interesting and again, reflective of what's sure to be a narrative for this year, which is even outside of Libra and central bank digital currencies, just the idea of these corporate coins. Even today, we heard that Wisdom Tree is doing a stable coin now too. So I think we're going to hear a lot more about this year.
It's an interesting one as well, though, to think about, Nathaniel, because, I mean, talking about a lot of these big-scale corporate coins, and while some do exist in forms or another, but these big sort of technological leaps and or big, sort of larger ideological projects in some sense, of course, Telegram, Ton, or Libra, or any of those, none of them have yet successfully launched. And I wonder if that positivity for Bitcoin and the Ethereum network and others would continue in a sort of sector where one of these is able to actually get off the ground and see functional use. This is getting a bit speculative, but I wonder your thoughts on that.
Yeah, no, I think it's certainly a lot easier to be positive about the thing that exists versus the thing that doesn't and comes with a lot of complication and big promises, right? So I think that the point is well taken. I think in some ways an interesting sub question of that for me is whether when these things actually launch, they'll feel more like Alipay or WeChat Pay, or will they feel more like a different version of Bitcoin or Ethereum? My guess is that they'll feel more like these kind of integrated payment systems where you don't really care about Ton or Libra or whatever it is if they actually make it to launch, which I think gets into a whole different question about the nature of digital money and the competition for it that's on the horizon.
Certainly an important question to ask and an interesting point to follow. But now moving to your number 4 for this week, the interesting case of Spencer Dinwiddie, the NBA player who has tokenized his contract And Arjun Balaji had some pretty interesting takes. I found this one pretty fascinating myself, but Nathaniel, delve into us the take on this latest tokenization in the NBA space.
Yeah, so three interesting points I think about this. One is what's actually happening. Two is this analysis from Arjun around the nature of fandom in the modern world, and then three is just what it means for the larger crypto space and mass adoption in general. So on that first part, so Spencer Dinwiddie has been trying to tokenize his contract for a while, and originally what he wanted to do was basically tokenize even the player option. So he has an option to extend, or they have an option to extend the contract in the third year, I think, or the fourth year, if things go well. And that's where a lot of the upside might have been. And so that's what he was really pushing for previously. Now, the NBA really didn't like that. They thought it amounted to gambling. They brought in lawyers. They threatened his contract if he went through with that. And so what we've got now is a much more neutered version where it's a Reg D exemption, which means that it's accredited investors only. I think they're selling 90 tokens for $150,000 each or something like that. And the upside potential has a lot more to do with kind of just bonuses that come along the way. There's something like 4.95% interest or something that you'll get like that. So it's a much more functionally, it will look more like a standard kind of instrument that's cool and more interesting, but it's not what he had originally imagined. And the thing that's cool though is that this is really breaking new ground in a major way. And he has been pushing. He says in a tweet just 22 hours ago, he said, "I can't wait to have a Reg A offering as well. The hoops we have to jump through now make the process cumbersome. NDAs, KYC, AML, accredited investors, cross-reference with other approved lists, but soon we will have it for all." Basically, he was commenting on a fan who really wanted it to participate themselves, which I think gets to Arjun's point. So Arjun sees this not just in the context of crypto and an interesting moment for crypto, but he sees it in a larger context of, I think, how kind of celebrity relationships are changing, where fans are affiliating with players, not just teams, and they follow players from team to team. And I think that that's an interesting observation, particularly in the context of this idea of tokenizing an individual or tokenizing an individual's career. And so the third part, I guess, is this larger context of mass adoption. And we now have right now, it basically looks like athletes are contending to be the group of celebrities that brings this technology into the mainstream much more than other sectors, right? You do see some celebrities talking about this, but it's mostly like the Michelle fans and people who are internet native celebrities, right? Who are talking about Bitcoin and things like that. Whereas in the mainstream world, you have Russell Okung and you have Spencer Dinwiddie, and they're actually, Russell's putting on conferences in LA where he's inviting people. He's wearing Bitcoin cleats. He's interviewing his teammates in the locker about Bitcoin after he's taught them about it and putting it out on Periscope, right? Spencer's going even farther and actually putting this kind of technology to work in his contract. So I think that this opens up a lot of new paths for new people to learn about this market and this industry and get involved.
I mean, it seems to me, looking at this particular case and analysis of this trend as a whole, that this is a potential opportunity to fundamentally change the relationship between fans and athletes, and as well, as you said, that sort of moving away from the team and the institutional narrative down more to the individual, should obviously the vision that, say, Dinwiddie had in his original scope that was open to, not just the accredited investors, become open. Is that the sort of the almost revolutionary change in relationship, the potential to play out? Do you see that happening?
I think so. And I think, people have been talking about a shifting relationship between, Group X and their fans forever, right? I mean, the internet from Bandpage, which went on to be integrated into Spotify and things like that. Like, we've been talking about this shift and this disintermediation of the relationship between anyone who has an audience and anyone who has, and their fans, their audience, right? And what this technology does is it's the next logical step of that gives it financial teeth. Now, I would expect there to be lots of pushback from the big institutions that are the intermediaries, in this case, the sports leagues, because they don't necessarily want there to be no barrier between their most valuable assets, which is their players, and the fans, right? That's dangerous for them in the same way that it's dangerous for record labels. Now, at least in the context of sports, you have generational affiliation for a team, right? It's not, I think Arjun's observation is really interesting, but I do think like if you grow up in the Northeast, outside of Boston, you're not going to follow Tom Brady if he decide to spend his last season at the Dolphins or something. You're going to burn him in effigy forever, right? Because you're a Patriots fan. So maybe there's a little bit more confidence on the part of those teams, and maybe sports are a good place to try some of this because of that.
Mm-hmm. Certainly, it could be a shifting environment, and again, one to watch closely. All right, but now moving to your number 3 for this week, Nathaniel. Travis Kling talking about Bitcoin as a safe haven, a narrative that seems to have gained at least some ground in the past couple of weeks, thanks in no small part to the US-Iran tensions as they played out over the last couple of weeks. What's the analysis?
Yeah, so as I said right at the beginning, this week was like a grab bag of 2020 narratives, right? So we've gone through, regulatory intrigue. We've gone through now tokenized securities and just the way that tokens might get mass adoption. And now we're right back into Bitcoin and this idea of Bitcoin as a safe haven, or this question about Bitcoin as a safe haven. And really, I think in some ways it's more, there's an underlying question, which is Bitcoin even a macro asset? And when I say macro asset, what I mean is, does it react to things going on in the larger macro environment? And these two questions have been hotly debated over the course of the last year. Now, last year they came up because there was kind of one point at which Bitcoin was surging when everything else was going the other direction. And it was a great headline for Bloomberg and CNBC and whatever to bring people on and say, is it a safe haven asset? Is it a non-correlated asset? What we're seeing now is, or at least in the context of this Iran situation, first the assassination of Soleimani and then the retaliatory strikes from Iran. We've seen Bitcoin seem to behave in parallel with some of those other classic safe haven assets like gold. And so Travis, he made it to the list for literally a single word, just updated with the chart. And the reason that he is, I talked to Travis after this on my podcast about it, and he didn't want to make too strong an analysis. He just wanted to show the chart and let people start to decide for themselves. And Travis has previously kind of explained how this sort of action, every time this sort of correlation and parallel movement happens, it creates more of a self-fulfilling prophecy around this idea of Bitcoin as a safe haven asset, because you have analysts and people who have to allocate resources all around the world saying, hey, the last 6 times things like this have happened, Bitcoin has acted like a safe haven asset. So maybe we allocate some small, tiny portion of, our safe haven basket to that asset. And all of a sudden, the difference between it acts like a safe haven because people are speculating that it one day will be a safe haven, and it just is a safe haven, gets smaller and smaller. So really interesting stuff from the context of just how Bitcoin is functioning in the world and where the Bitcoin narrative is.
Yeah, certainly the ability to create our own narratives and make them real, a fascinating world that we live in today. But speaking of narratives that have plagued the crypto space, let's move to your number 2 for this week. And an interesting statement coming from the IMF's chief economist, Gita Gopinath, talking about the permanence of the US dollar's position as the currency supreme in a Financial Times op-ed. This was a fascinating one that caught my attention too, but what's your take on this, Nathaniel?
Yeah, so, again, another one of the narratives for 2020 has to do with the existing central banking establishment grappling with the emergence of new digital currencies. And I think it's more than Libra. It's not just Libra, it's China's response to Libra. Certainly, we saw last week China say that, quote, the top level design of their digital currency was complete, whatever that means. I think in some ways that's more interesting as China being very clear that they want to be seen as the leader in this space more than any actual indication of exactly where the digital yuan is. So you have that going on. And then you have, people like Mark Carney talking about a synthetic hegemonic currency, right? A digital currency from central banks backed by a basket of currencies designed to challenge the dollar for its reserve currency status. And basically, so Geeta Gopinath is the chief economist of the IMF, and she wrote that that it's unlikely in her estimation that simply a better technology underlying a currency is enough to actually displace the dollar. And that in fact, what it takes to be a reserve currency has to do with institutions and has to do with trust in those institutions. Now, the irony for a lot of the folks in the Bitcoin space was this idea of institutions and trust is obviously low in these sectors. However, for the traditional financial establishment, the dollar is still king. And in fact, in a lot of parts of the world, obviously, the dollar is still king. And so I do think that it's worth her reviewing and heeding this kind of perspective as a good barometer for where the mainstream of the global financial or economic order is. And I guess one more point that should be noted, she really wasn't talking about Bitcoin at all. She was talking about not even Libra so much as this Mark Carney idea of a central bank digital currency that a group of central banks create. So it's pretty interesting just to get a read on, I guess, where the financial establishment is right now.
It certainly does become that question of differing narratives and differing worldviews when you talk about, the don't trust, verify sort of approach versus that classic generational trust in institutions. It is a divergent world out there, many narratives colliding, and I think Geeta Gopinath managed to hit that one a little bit on the head there, at least enough to spark conversation. But now moving to the conversation that we cannot avoid in 2020, the time has come, Nathaniel, and we have hit on the halving that will come in May. And as with every major event in the crypto space, a lot of conflicting narratives around, and Nic Carter does justice to talk about the efficient market hypothesis. Break down a little bit about his argument was and why you were drawn to it.
Yeah, so I mean, I almost had to go against my own instincts to put something about the Bitcoin halving in the number one slot. This is entirely because Nic Carter wrote a 29-minute medium read going so deep on this particular part, and you have to recognize that, right? This list is part about the trends and part about just the great content that's created. So that's why it's in the number one spot. I do think that the Bitcoin halving or halvening, I actually had a massive Twitter debate last week about which it actually is in terms of lexicon. But
wait, where did you land on that, Nathaniel? I need to know, halving or halvening? Which do you go by?
Halving refers to the actual thing that happens. Halvening is the event. Okay. And there seems to be some like people converging on it can be both because there's that slight tweak, which I kind of like. Okay, so, this is going to be an unavoidable conversation right up till when it happens. And then after, too, you're going to see whoever was right in terms of whether they think it was priced in or it changes the price dancing for the 60 days, let's say, following the event on the grave of the arguments that they feel like they've vanquished, even if 2 months later it's completely different, which I think is what kind of makes it so interesting. And so anyways, the part that Nic is bringing to the argument is this question of the efficient market hypothesis, which is really about whether whether future happenings are priced in now on the basis of information that's known. And in some ways, the simple TLDR on the efficient market hypothesis is that markets adapt information at the time that the information is available, not at the time that the event happens. Where the efficient market hypothesis leaves room for change is the fact that there will be new events, new information, even around that event that can't possibly priced in because we haven't found it out yet. And so this is a very long-winded way of saying is like we still kind of don't know. The people who are paying attention may have priced this in, but there's whole sets of actors, right? Every week institutional investment becomes easier and easier based on custody, based on security, based on all these different things, based on new players in the market. Each week, more and more of these institutions are getting closer to the idea. They're seeing news headlines about mining and mining interests setting up in multi-$100 million ways in the US, which creates new information cycles. So, I think for me personally, I think that there's a lot of value in understanding these kind of economic theories that hope to explain what's happening. But at the end of the day, we live in a world where even if you assume that all available information is priced in right now, there is so much information that is unknown, or is disparate, or is fragmented, or is being built in very small different ways, like the way that companies are making decisions about what products are going to offer in 2 months when it comes to custody and mining, that it's very, very hard to extrapolate out from this exact moment. So, I think that it's an incredibly valuable argument to read, if for no other reason than people maybe won't just smash these initials around on Twitter like it proves their point one way or another. But at the end of the day, I am firmly in the camp of we're not going to know exactly how this event impacts the price of Bitcoin until it actually does. And in fact, I kind of think that we're not going to know for a little while after it's happened. I don't think that it's an immediate event. It reminds me a little bit of, although very different, of when Bakkt launched and there wasn't a huge amount of activity in the first couple days. Again, people danced up and down and said, "See, we told you it was a big nothing burger," or whatever. Meanwhile, Bakkt, the volumes has steadily climbed and grown, and it's been, the way that it's infiltrated the market has been more subtle than just there's going to be one big price movement. So I think that we have a tendency to want to know everything in advance, and it's impossible to do so. So, but you know what? We'll debate it every single day until it happens, and then again after.
As they say, known knowns, known unknowns, and unknown unknowns. It's all out there, and we'll have to just try and piece our way through it. In the meantime, Nathaniel Whittemore, I want to thank you so much for being able to help at least make a little bit of sense of the milieu of different ideas out there in the space. For those at home, keep watching and stay with us at blocktv.com for all the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.